Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your weekend update for the metal markets. And this is Friday, the 17th of March, 2017. All right, my friends, an up week. Let's face it, this was an interesting week. We got the opposite reactions that so many of us thought would happen when the Fed announced 3 rate hikes. Ms. Yellen said yes, but her tone was dovish. Maybe it was buy the rumor, sell the fact, or sell the rumor, buy fact. I don't know which one, but it's the opposite of what people thought. The dollar index broke, the metal markets took off, and while we're down right now at the end of Friday from stock indices, they went up and then they went sideways on it, and that's what you can say there. Energy prices still having a heck of a problem holding up at all, and even the rebar gas, as much as it was up today, came back and very close to unchanged. So let's look at a gold monthly chart and get a feel where this market's at. When we're looking at these charts, I want to bring you into how they're constructed. On the bottom, I use an oscillator called slow stochastics. Now, there's different versions of stochastics, but an oscillator for this is a momentum indicator. Neutral zone is in the 50s. It's pretty much where you're at. Overbought by many standards. The traditional way is anything over 80. Under 20. I have my own take on that, and we'll get to that as we move along. Then on the top part of the chart, the black dashed lines are called Bollinger Bands. They're an algorithm designed to keep the market trading within them 95% of the time. You don't want to go to 100% because they'd never come out of them, and the key is to hit them or come out of them so that you have an idea of where resistance, support is. Another way some traders call it, such as I do, is if you're long, take some money off the table, take some money off the table. In other words, support, resistance. The neutral line is the 18-day average of closes, and I also plot for you the 100-day, and this, because it's a monthly chart, I said that wrong. This is the 18-month moving average of closes in the 100-month. Got that? Because everything's on a monthly chart. Now, the brown line represents what's called a swing line. And a swing line helps you define trend. Now, for example, a downtrend would be lower highs, lower lows. Gee, lower highs, lower lows. We don't know where this low is yet going to end up, so you're in a downtrend. You can convert this to an uptrend if next month, April, you get up and over 1263.10 if it's not taken out in the month of March. So you got to wait and see what it is. But right here where the market's at, it has a small upside bias because prices are trading over the red number, which is the 18-month moving average, or at 1228.50. That's 1228.20. But the trend, as I define it with the swing line, is down. The two fight each other. I call that neutral, and momentum is neutral. Now, on the weekly charts, we're going to take what we just talked about and apply them on a weekly basis. So the moving averages become weekly moving averages. First off, I look at the general thrust of the market. It's gone from 1263.10 to 1194.50, and we've had a bounce. But overall, you're in a downtrend. I then look to see how the market's doing on a closing basis. So we went down to 1126.50, came up, small correction, and then spurted forward. This current break has not taken out that break. So I'm going to call this in an upthrust unless prices close back under the 1200 level. If they do that, I'm then going to say the market has converted itself back into a down thrust at that point. When I'm looking at a weekly swing line study, I'm looking for a trend. Now, in an uptrend, you're making higher highs, higher lows. In a downtrend, lower highs, lower lows. As you can see, you made a higher high, and then you immediately plunge down to a lower low than that one. So you have no trend. In addition, where did the market fall to? It fell to the 100-week moving average of closes in green and the 18-week. They acted as support in the market, and you got your bounce back, but you are not trending. What you have is an upside bias because you're over those averages, but the swing line is not trending. Where might resistance come in? Well, do you see the top dashed line? That's the Bollinger Band top and bottom. If prices were to rally, a potential resistance point is 1264.50. If they're to break again, the potential supports are between 1203 and 1194. In terms of momentum, you had been overbought. You've dropped back where both numbers are trying to get under 70, but they're not. As long as one of the numbers is over 70, my interpretation, which differs from the traditional slow stochastics, is the market is overbought. I use the numbers 70 and 30, not 80 and 20. I think 80 and 20 are used for a different purpose when a market locks into a trend like it did here and both numbers are under 20. So I have a different take on it. When we come to the gold ETF, you can see you made higher highs, fell back, came just like you did in the futures to the 100-week, and then the 18-week average, and you bounced away. Are you trending? You are not. Are you overbought? Absolutely. Both numbers are over 70. Momentum, pretty flat, and you're just sort of stuck here with a bit of an upside bias. Let's see if I can get this to flash. Whoops, excuse me. Maybe I can get it to work. There you go. It gets stuck every now and then. On the gold miners, you fell back to the 18-week moving average of closes, but you did manage to get under this break low. So like so many of the others that we're looking at, again, no trend, upside bias, fighting a battle against the 18-week moving average of closes. And unlike the other markets, at least you're not in overbought territory. But I would say that as a whole, the gold market not trending here. What about silver? Well, it's interesting in silver. The current break low is 1682. Now, I cannot tell you that low, what it's going to do just yet, but if you can take out this high, this week's high next week, then I can say you got higher lows and higher highs. Right now, I've got a higher high. Actually, if I'm looking at this, I think you got higher highs and higher lows. I'm going to stick with that. Higher and higher. I got the wrong arrow here. This market's in a better shape than the gold. It's acting in a bull trend until you take out 1663.50. Let's take a look at the next chart, the copper market. This market has no trend. It's got lower highs and lower lows, but it's over the 18-day average of closes. The two fight each other, you got nothing. I could say you have upside bias, and the market is corrected, past tense now, in overbought condition. It's found the home here in the 262 level, waiting to see what it wants to do maybe this week. Palladium market, higher high, lower low. My only chart that was wrong was the silver as I'm looking at it. And coming down through here, you're, again, like the other market, copper, you're no longer in overbought territory. You've worked that off. It needs to rebuild. It had trouble staying over the 100-day average, hit that upper Bollinger Band, and bang, right back to what I call that line in the sand, that 18-week moving average of closes, and held there. In the palladium, the market's got a pattern of lower highs, lower lows, right into the 18-week moving average of closes, held it with a nice swing. Now, if we take a look, last week's high and low was 776 3/4, 776.75 to 746, 776.85 to 742.65. We're having an outside week up. What could trigger very bad action is taking out this week's lows. If that occurred, I would call this rally this week a trap for the bulls, and then I'd look for the market to even possibly get down here. With an overbought condition, that's probably the best setup on the chart because then you would start rolling back the other way. It's not a trade recommendation. I am just giving you observations on a chart. Dollar index. I realize that the press is enamored with saying that the dollar's in a big uptrend. It's not. It was back here a hell of a lot higher in the 103 area than it is at 100, 165. It has fallen, if anything. I admit it's longer term on a weekly chart, not trending. You have the higher high, the lower low. The market came down this week with this low, did not hit the lower Bollinger Band, but momentum is still pointing down. Let's see what it does next week. The bias is down, not up in the dollar. So I put that all together, and I try to come up with what to do. Now let me tell you what I do, because you watch these videos. I can teach you to do exactly what I'm doing if you give me just about 2 weeks. I created a course that's 54 video chapters to teach you the swing line. And it will look like this to begin with. I use PowerPoint presentation, then take you to charts. I want you to understand the concept. We just had somebody calling in and they said, where do I start? Chapter 1, chapter 1, swing lines, first chapter, then second. I was laughing. Do I start in the middle? I can't believe somebody asked a question like that. You follow the sequence because I believe that you layer. In other words, each step teaches you and takes you to the next step. And I do a lot of repetition. That is by design. If you understand the basics, you can carry it the rest of the way. I write commentary to go with it. But let me tell you the real part. You're going to look at the videos. You're going to then go back on the charts, and you can bring up the same days. Then each morning, I put out a video that covers 40 charts. You're going to open it. Let's assume you're on swing lines. I'm going to discuss the swing lines. Then you'll be on moving averages. You're going to say, look at how he's discussing moving averages. Every morning that happens, but what's really going on, I'm going to throw out trade ideas to you, back and forth, get your mind going to understand this. And for those of you that are listening, what's an idea worth? Well, it might be worth what you already wanted to do and you take advantage. You know, courses like this go for $1,500, $1,000. My course used to be $179.95. I was able to redo the whole course, every chapter, and use new technology. The course is now $89.95. That includes $100 worth of charting software. You get 30 days of my market research and all the videos. It's really a $160 value. In addition, just tie that into the course. And I'll do what you want better. Type in Ira 15. You can get the course for $15 off, $74.95. No shipping, no handling. I think you'll find this something that makes a lot of sense. How do you do it? If you click up here and you're watching me on YouTube, take advantage of it that way. And by the way, these coupons, they won't be lasting that long, so take advantage if you want. $74.95 by clicking that. Type in Ira 15. Under us on some websites, you can see that. It says click here, but you won't be able to get to our site to buy it that way. The best way's up there. Or, as you can see right here, www.iraepstein.com. Click on Education. It'll drop you right down. There'll even be a FAQ page, so we can answer all your questions that you have, how this whole thing works. I'm Ira. You have a great weekend. Let me teach you at least my concept of how you analyze charts. Take care.